Hello everyone. Position winding was the main theme overnight as many investors bailed out of long positions in emerging market currencies. The South African rand was the biggest loser, falling some 3% against the dollar in one day. The Australian and New Zealand dollars, two of the commodity currencies, fell with them, with the New Zealand dollar hitting a low for the year. But not all the emerging market currencies fell. Some of them that have been weak recently, such as the Czech krona, did well as people got out of short positions. The position unwinding benefited the euro more than the dollar, as many investors were holding these positions, long EM positions, against the euro. It was noticeable overnight that jobless claims were higher than expected, which sent treasury yields lower, which helped to support equities. So we've gotten from last week's positive correlation between stocks and bonds, when good economic news sent both stocks and bond yields higher, to a negative bad news is good news correlation, where bad economic news that implies no change in quantitative easing means bond yields lower, and that pushes stock prices higher. It's not clear what this state implies for the dollar. Recently, risk on has meant buy the dollars, but that may not continue if the driver behind risk appetite is hopes for continued quantitative easing. Today, the big news is going to be the Eurozone CPI for May. The market is looking for an acceleration in headline inflation to 1.4% from 1.2% in April. That would reduce the necessity for the ECB to cut rates at its meeting next week, and so could be euro positive. In the US, the personal consumption expenditure deflator, the Fed's favorite inflation indicator, is expected to be down 0.2% month-on-month in April versus down 0.1% in March. So far, though, such a low level of inflation hasn't raised alarms with the Fed, and so shouldn't be any barrier to tapering off quantitative easing. As for the technical picture, euro-dollar broke above the 130 figure key level, but hasn't been able to break through resistance at 130.75 this morning. On the other hand, the pair seems pretty well supported at 130.30, a former resistance point and its 200-day moving average. If this support doesn't hold, then we may see the pair drop towards 129.80, but I think that after the CPI comes out, euro-dollar may head towards 131.30, a previous high and the top Bollinger Band's level. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.